I want to reveal to you guys the first purchases that I have done in 2022. I deployed about $1,000 this past week, and I want to go over every single purchase that I did. Now, some YouTubers, are showing off how they have put tens of thousands, if not more, per video into the market and what they buy, which is great. I'm very happy for their success. But this channel is showing you that somebody that kind of started at zero, what is the success that is going to happen with me? I'm taking you guys on this journey. And recently I did a video showing you my performance at the end of 2021 with my portfolio. I went over every holding, the profit I've made in this portfolio, the dividends I've earned, comparing from the first year to the second year that I've been investing, and what it's done for me. And it's really to be transparent. I really want to do that because I'm putting it all out there on this channel. I'm putting out my opinions and my bullish theses, my bearish, and so I want to be transparent and show you guys what's working, what maybe isn't. And so I'm very proud of the performance I've had so far. And so it's showing you what 2 years of investing can do. So I really highly recommend that video. I'll put it down in the comments. And it's just me being very transparent. I think that's the right thing to do when you have a channel like this. So let's get into the market. Recently, there's been a little bit of a dip. This is due to the Fed having a meeting late last year, but now the minutes of that meeting have been released, and it's showing that they might raise rates sooner than expected. They're going to be very bullish on doing this sooner than expected. So the market reacted. There's been a little bit of a dip. And so, I thought this is a great time, a buying opportunity. Anytime there's kind of a dip, this was a small dip. It's about, 3%, anywhere from 2 to 3%, maybe a little bit more. And I think it's good to always be invested and not hold cash on the side. And I'm going to talk about that at the very end of this video. Um, but yeah, so I deployed almost $1,000, or just about $1,000 this last week. So I want to share with you guys everything that I did. So we're going to start with the first purchase, and that is Vici. Now I bought 8 shares of Vici, and I am just really bullish long term on this company. Now, for each purchase that I mentioned today, I'm going to show you the last 6 months of their stock chart. So you'll see here with Vici that they've been down the last 6 months about 9%. And this is really due to the variant, the new variant that's spreading so fast, and then the variant before that that was a lot more potent. A stock like Vici, who has a big concentration on the Vegas Strip, that's an entertainment hub. So people travel there for enjoyment, for entertainment. And if there's something going around like, one of these new variants, people might push back their trips. And so I think that's what you're seeing here with Vici. Um, they're making some big acquisitions with MGM growth. And so it's expected that they won't make as many acquisitions or in the short term, who knows long term. So I think that's also part of why this stock has gone down a little bit because they're seeing that kind of, the company going after these acquisitions kind of slowing down because they've done a lot. And so, obviously they probably have to now let the cash catch up from all these purchases and let those profits start coming in before they can maybe move forward with more. So Vici, uh, I've done many videos on this, so please go through my channel to look at them. But I'm very bullish on this being one of my top holdings because it's an experiential REIT and it's one of the, I think, the top experiential REITs that you can buy out there. Vegas is, just massively popular, and I think will be the rest of my life and be the top entertainment destination in the world. So I bought 8 shares of Vici. The next one I bought was a international ETF. This one is called VXUS. I call it VIXUS. But you'll see here that with their chart, similar, to Vici, in the last 6 months, they've been down, not as much. They're down, 3.19%. But I think the international market is going to see a pretty decent, growth over the next year or two because they've been kind of held back as well, probably more so than the US. The US has had quite a bull run the last couple of years, and the international stocks haven't quite been up to that par. So I think with an ETF, I'm putting my money into something very, safe and diverse, and it's going to benefit from the growth of a collection of companies together. And so I want to show you the top 10 holdings of, the ETF here, VIXUS. And this is basically showing you that uh, their top 10 here, it only makes up 9.2% of the total fund, and it has a total of 7,883 companies. That is a lot of companies for an ETF. But really, when it comes to international, I want to be as safe and diverse as possible. So I really like this Vanguard International ETF. And you'll see big names in here like Alibaba, Toyota, Tencent. So it's got some very quality international companies in its top 10, even though it's not a huge portion of the total. Now let's look at their geographic kind of exposure. They're mainly heavily in Japan and China, and then it follows down from to United Kingdom, Canada, Switzerland, France, Germany, Taiwan, so on and so forth. So, I definitely think Japan and China definitely deserve to be towards the top of their geographic exposure. I think a lot of growth will happen in those countries. So overall, VIXIS is my international play. I think it's too risky, in my opinion, to put your money into individual companies internationally just because with China, it's hard to know what regulations they might push further on their companies in the future, and I'm just not willing to take that risk. That's just me though. Everyone's different. I know a lot of people are buying Alibaba, and they're really bullish on that, and I hope it does well for them, because it'll also do well for me with my ETF. Maybe obviously not the same level, but I just like this stock or ETF because it's my international play, and it's the safest route I'm willing to go internationally, and it gives me exposure there. The next one is my speculative stock, and that's Tattooed Chef or TTCF. So Tattooed Chef, if we look at their chart, it hasn't been very pretty. They're down over the last 6 months, 27.5%. TTCF is kind of a cult stock. It has a cult following, and it's obviously in the plant-based food category. But this company, to me, has been expanding massively. I see them in almost every store now, and I think that will catch up with them sooner or later when it comes to their financials. They have good financials, but they have not reached quite what the estimates have been when it comes to earnings. They've been below. And it's always nice to see an earnings beat, but it's not by any means any bad numbers. It's just, if you don't beat analyst estimates and expectations, it's, stockholders aren't going to like that. So I think a lot of people have sold out of this. But mind you, they're still doing great financially. They've made a lot of acquisitions themselves. I think they're gearing up for big growth in the future. And this is only, I think it's less than 2% of my portfolio, I believe. So again, it's not a big play. I realize that, this is a company that I'm taking a risk on. But, if it does well, awesome. I'm going to make some money. If it doesn't, it's 2%, less than 2% of my whole portfolio. So it's nothing that is going to really hurt me too much. So I'm bullish on this stock. I think it's going to do well. I think it's in a category, the plant-based, food category that's going to grow massively over the next decade. And I think with their business model and everything, I've done videos on this before too, so check those out. But I really think this is a company that can really grow and become a well-known name in the plant food-based category. So I bought 6 more shares of Tattooed Chef. And with VIXIS before, I only bought 1 share. And next up is the big quality dog that is Microsoft. Now, in my video where I went over my portfolio, I never want to have one stock be more than 10%. This one is a little over 12% of my portfolio. But, with any kind of dip in a quality stock like this, I just couldn't resist buying at least 1 more share. So Microsoft, I bought 1 more share. This is just a high quality stock. I've done videos on it before. I'm bullish on it because it's getting into the metaverse. It's growing all of its subscriptions. It's big in the Azure cloud business. It's got LinkedIn, which is the new business card, in my opinion. That's what I've stated before in videos. So Microsoft to me is just a big play, and yeah, it's a big part of my portfolio, but hey, I'm okay picking up a couple more shares, especially if it dips. And if we look at the last 5 days of Microsoft, it's down over 6%. So to me, that's anything over 5% is a decent dip. So I just had to pick up some more Microsoft. I think this one will easily go towards $400 a share towards the end of this year. So I'm I'm very satisfied with purchasing one share of Microsoft. Now, the last three I'm going to go over are ETFs. The first one is FMAT. This is a materials index ETF. Over the last 6 months, it's gone up almost 7%. It's almost near all-time highs. But the one place I will park my money when I feel the market's at highs or certain ETFs are at highs is in ETFs because that's ETFs are diverse, they're safe, and with these ETFs, I've done much research on them. They're very good quality ETFs, low expense ratios. These are going to grow in long term. If I can't choose between any of my individual stocks to put money in, then I choose one of my ETFs. So FMAT is one I chose to put in. And I think the materials sector is one that's hard to kind of, for me, analyze and pick. So I'd rather put it into an ETF like this. And if we look at their top 10, now they're very heavily weighted on their top 10. It makes up, almost 50% of the portfolio, and it only has 124 companies in this ETF. Mind you, VIX has had over 7,000, almost 8,000. So you'll see very quality companies in here, like Sherwin-Williams. It has the, DuPont, which I own individually. I really like that stock. And so I just really think this is a great place to put my money, and long term, I'm going to see very steady, reliable growth. It also pays a dividend. And so I'm just very happy to put my money into this. And I bought 2 shares of FMAT. Now, the next one is FIDU. This is in the industrials sector. Now, this one over the last 6 months has, it's up only about 2.5%, and it's nearing all-time highs. And again, I don't mind putting my money in ETFs no matter what level they're at. Long term, these are safe bets and steady growers. And so I'm very happy putting my money into these. Now, Fidu's top 10, you're going to see a lot of companies in here. One that I like is Caterpillar. I think this ETF will benefit from the infrastructure bill that passed, so over the next decade, I think it'll really help an ETF like this. Its top 10 make up 28.9% of the portfolio, and it has 366 total companies in this ETF. I bought 2 shares of that. Now, the last one I bought is in the healthcare area, and it's an ETF called FHLC. Now, FHLC has remained relatively flat over the last 6 months, so I was actually really happy to pick up a share of this. If I had more money, I'd probably add a few more shares. But this is a industry, the healthcare industry, that I think will always be needed and will get bigger and bigger as the industry grows and innovates. And so I really want to grow this ETF into one of my bigger holdings. Now I also own Johnson & Johnson and AbbVie, which are in the healthcare space. I like those two as well, but I think an ETF is just a good safe bet as an addition to my portfolio. And so with their top 10, it makes up 43.5% of its portfolio. They have 479 healthcare related companies. You'll see, Johnson & Johnson in there, United Health, Pfizer, AbbVie down there, just really good quality healthcare companies. So I really like this ETF, and I will probably be trying to add to this a little bit more heavilier this year, just because long term, I think the healthcare sector is just going to be, really a big industry. And I mean, it already is, but I think, it's got a lot of innovation still, and healthcare is something that's always needed. So there are the stocks I bought: Vici, um, International Vixis, Tattooed Chef, Microsoft, my materials FMAT, my industrials Fidu, and my healthcare FHLC. So I want to show you guys this because I think it's always good to be invested in the market rather than sitting on the sidelines. A lot of people right now are holding cash because they are almost certain that there's going to be some huge stock market crash. The thing I want you guys to always keep in mind is for forever, right? I mean, since I've been investing and doing research and listening to others who have been in it for a decade plus, people always are crying out that there's going to be some stock market crash. But on average, a crash only happens once every 8 years. And so you keep your money just sitting on the sidelines, you're missing out on growth because a stock market happens on average once every 8 years. And just think how much the stock market grows in that 8 years. On average, it grows 10% a year. So if you stay out of the market, let's say for 8 years, grows 80%, you have a 20% crash, you missed out on 60% gains. And it can be in any context. It can be even a shorter time frame. Let's say the market goes up, 20%, it drops 10%, you buy in, you missed out on 10%. So all I'm saying is nobody can predict the market. Yes, a lot of stocks are at highs, but that's not to say they're not going to keep going up, up, up. I mean, there's a lot of analysts that I've seen on both sides of the aisle here, and it's always going to be the case. And so if you stay out of the market and are not invested, I really think you're hurting yourself. I think it's best just to invest regularly and just keep investing because long term, with your diverse portfolio, remember, be diverse in quality companies and good reviewed quality ETFs, you're going to create massive wealth for yourself in the future. You just got to stick with it and kind of drown out the noise because if you listen to the noise, every day someone's predicting a market crash. And if you keep listening and buying into that, then you're going to miss out on some huge gains. I mean, just look at what happened since March of 2020 when the pandemic hit. I mean, the market has gone up massively. And I've had friends that did sell out in those March lows, and they had to either buy in at really much higher prices or they haven't gotten back into investing. So it's not a good thing. So when it comes to that, that's why, this money that I put it in because I could have saved up and put 10,000 in, but then I probably would have missed out on a whole year of investing. And that's just, you're missing out on dividends. There's a lot that you're missing out on. So I'm an advocate for staying invested. Of course, always have cash on the side for a rainy day and maybe put a small amount of money aside in case if there is a market, you know, crash that you can put a little extra in. But if you're putting in regularly, you're going to get a part of that crash, right? Because I put money in every 2 weeks with my paycheck. A crash could be a few months, a year or two. So I just think it's best to not try to time it because it's impossible. So here I am again being transparent again. So I really appreciate it if you guys subscribe to my channel. It's free. Not a lot of things are free these days. This is someone that is sharing their experience with you, their journey of investing, their opinions, their advice, their knowledge. I mean, just look at my channel. I have a diverse, um, you know, uh, realm of videos that I put out there on different topics. I have my finance side, I have my fitness side. I think these are two areas to really, grow in it's going to provide you with a long-term success plan both in your health and in your financials. So I appreciate it if you do, and I appreciate your viewership. And thank you guys so much. Have a great day. We'll see you shortly and soon on Mark's Finance and Fitness.